Hello there, good morning, good afternoon, good evening, wherever you are. Welcome to Fast Facts. This is Focuswright and Focuswire's co-branded regular or semi-regular look at some of the very important things that are going on in the travel industry at the moment, particularly around the outbreak of the coronavirus and how the industry is reacting to it. This particular one, we had one 2 weeks ago, but this particular one is the state of travel startups. Winners when the industry recovers. Now, most of you know that running a travel startup is pretty difficult in its own right. So obviously people are trying to raise money. They are evolving their products. They are doing lots of things, building their team. But then if you add the nasty element of a global pandemic into the mix, and things can get really extremely difficult, like for the rest of the industry, but perhaps more acutely for travel startups. Now, over the course of the next half an hour or so, you're going to be hearing about what are some of the funding trends that have happened in response to COVID-19. Indeed, I suppose raising capital during a crisis, learn about the general state of the startup ecosystem before and most importantly after this particular outbreak. And I guess lastly, but not in no means least, is sectors that are likely to fare well. Now, it's not going to be me, luckily for everybody else that's doing this presentation, it's my boss. So this week we've got Pete Comeau, who is the Managing Director at Phocuswright. So a very good day to you, Pete.
Thanks, Kevin.
Okay, so that's it. Enough from me. I've got a couple of questions for you at the end, Pete. So it's over to you with the presentation. Thanks very much.
Yeah, thanks a lot, Kevin. And I think you may have understated the challenges of being a travel startup. So we'll get into that as we proceed here through the presentation. So again, I look forward to presenting some research, and Kevin and I will chat a little bit at the end. So for today's Fast Facts session, we will share some data to help map out how startups and travel funding are impacted during this unprecedented coronavirus crisis. We've dug into our State of Startups database to pull out trends related to what industry verticals and horizontals travel tech entrepreneurs are focused on and which are receiving the most funding. After I present the data, we will look at the hottest startups as identified by our PhocusWire editorial team this past November, and we'll map them across the ecosystem. And then finally, I'll share various ways we here at Focusrite support the startup ecosystem. Before we dig into our startup analysis, I'd like to surface some pulse survey data that we are collecting through a poll on Phocuswire. We have run this now for a few weeks and have collected over 700 responses from our audience. So this is a growing, fairly popular poll survey on our site. The data gives us a directional sense of how the industry feels about the impact of the current crisis on their company's finances. And as you can see, nearly 75% are concerned the financial impact will become critical prior to the beginning of the fourth quarter. And within a 6 month, that's within a 6 month time frame. The other quarter is looking more end of year or into 2020. And it's been interesting to see how this data has evolved. You know, those looking at more than 9 months has actually grown a bit over the last week and a half since we last refreshed this survey data. When we asked about the first signs of recovery, the largest percentage, over 1/3, are anticipating sometime in Q3. Nearly 40% see the first signs of recovery beginning in Q4 into 2021. So we have quite a predicament here, with 3/4 running into severe financial challenges before the end of Q3, yet recovery not viewed as likely until we get into Q4 and beyond. So it'll be interesting to see how that evolves. Focusrite has tracked travel market size and online penetration in key global markets for over 20 years. As we narrow this lens to a 6-year time frame, we see a key trend developing across every region. Globally, online travel penetration, or the percentage of the total travel market that is booked online, is rising at a 10.9 CAGR and is forecasted to surpass 50% later this year. Now, it's important to note that we are in the process of rebuilding our forward-looking sizing estimates, downward adjusting clearly based on the crisis. However, we're confident that the offline to online trend will continue. This momentum is a catalyst for those digital-first travel startups to grow their businesses and raise money in the hopes of disrupting traditional and offline segments. Phocuswright has tracked over 3,000 travel startups since 2005. We have hand-curated them and categorized them by industry vertical, horizontal, and business focus. We have also manually tracked the funding rounds of each travel startup. And last year, we launched a visualization tool which allows our customers and our analyst team to slice and dice the database by founding year, by funding, by location, different categories, company status, and more, kind of like a Crunchbase for travel. We use this database in a number of ways. First, it provides us with deep, unique insight into trends in travel startup founding and funding activity. It also provides visibility into which types of companies have staying power and which are just flashes in the pan. And lastly, it helps guide our selection of which companies to place on our event stages and provide visibility to on Phocuswire. So back to Kevin's initial point, what's the first thing to know about travel startups? It's a monumental challenge. While startup challenges are not unique to travel, some of the underlying technology and fundamentals of the industry create larger barriers startups must overcome to succeed. Starting any company is hard work. Most startups, regardless of industry, are bootstrapped initially, and there is always a time crunch for startups to develop an MVP and build a runway to commercialization before the limited funding runs out. To add to this challenge, most of the time, the first idea is not the one that ultimately succeeds. So it's essential to fail fast and pivot early. Then there's competition, customer acquisition challenges, convincing an industry corporate to move ahead with the trial of a product, executing the technical requirements, and getting commercial buy-in from all the different stakeholders is extremely time-consuming. Finally, mapping out the road to an exit. Now insert a near shutdown of the industry due to COVID-19, and you can multiply the challenges tenfold. As corporates pivot to survival mode, pilots become much more difficult to secure. Funding has dried up, exit opportunities are few and far between. But let's not dwell on the present and instead look a bit to the past to understand the foundation of the travel startup ecosystem, and then we can map out some forward-looking trends that will shape the future. So as we put our blinders on here, and I know it's difficult to do, but as we block out the last 6 to 8 weeks, we did see a much more rosier picture for travel startups. As I mentioned previously, we've tracked over 3,000 travel startups over the past 15 plus years. And we just recently ran an analysis of those founded just since 2015, which included 1,009 of them. And we found that this group has collectively raised $6.2 billion in funding. An important note is that we track categories like ride sharing, taxi hailing, bike and cycle sharing, and urban transportation, but we remove them from this analysis as we often do, since we view them as much more relevant to the local transport and commuting ecosystem rather than the travel industry proper. So let's first look at funding to travel startups since 2015. We see that funding has been rising dramatically since then, nearly tripling from 2015 to 2016, which is on the left part of this chart, and nearly doubling from 2017 to 2018. Now, 2019 was by far the biggest year in history for travel startups in terms of dollars invested, jumping from a little over 1.5 billion in 2018 to over 2 billion in 2019. And the first quarter of 2020 actually started out very strong with more than 800 million raised, although if you put that into context, 500 million of that was just by corporate travel startup TripActions, which was founded in 2015. So 2020 began with some really decent potential, but naturally, we now expect funding to diminish quite severely during the rest of this year and will fall, well short of 2019. And here's a little deeper look into those rising dollar amounts. Here we have average funding round size on the black line growing dramatically from under 5 million in 2015 to almost 25 million in the first quarter of 2020. And on the blue line is the number of funding rounds that have taken place per year. As you can see, there was a slight bump up in 2018, which saw almost 300 funding rounds, but 2019 dropped down to around 200 rounds. The average funding for the first quarter 2020 is a bit skewed by TripActions, as I said previously. But the takeaway is that the size of the funding rounds is climbing while the number of funding rounds is actually shrinking, which translates into more money going to fewer. And these fewer companies are generally mid to later stage. So this is a trend that has played out over the last few years, and the COVID situation may actually magnify it as investors looking to place safe bets with the companies that have the best chance of survival through the pandemic and beyond. Those who already have cash in the bank and a chance to solidify market dominance as travel recovers. However, some travel startups are proving that fundraising is still possible in this climate, even at an early stage. While it feels like the sky is falling, not all fundraising in travel is falling apart. In late March and early April, as travel had already halted in most parts of the world, many recently founded travel startups were able to close or announce the rounds that they had in progress. Huilani Helios and Fenbiatong and Italite raised tens of millions of dollars following the precedent in corporate travel set up by TripActions. And we've actually seen quite a few corporate travel startups and innovation occurring in the last 3 to 5 years. Air Doctor raised almost $10 million for their medical travel solution. And then there were some smaller rounds that came in for Bimble, Pruvo, Eddie Travels, and Guru Hotel. Plus a round for Hotel Mize where the amount wasn't disclosed. And it's also interesting to note, both Pruvo and Hotel Mize are in the hotel profit optimization space, which will obviously be an important one in this climate. So here's a view of which industry verticals received the most funding during the last 5 years. So we looked at founding, or we'll look at founding next, but this is a picture of funding. And the vertical that we, as you see other here at the beginning of this chart, the first on the left, quite substantially the top funded vertical, where almost 2 billion out of the 6.2 billion has been raised. And this is mostly corporate travel startups, as I offered previously, that operate pretty equally across multiple verticals. So those are the companies like TripActions, TravelPerk, Lola, and others that have raised a lot of money. Following that are two main accommodation categories, with hotel and hostel slightly outpacing short-term rental at around $1 billion going into each. So combined, those two accommodation categories are nearly 1/3 of the funding. And investor interest in these categories is clearly piqued by the opportunity presented by a fragmented supplier marketplace, relatively high margins, and the ability to deploy B2B enterprise solutions to lodging operators and suppliers. So there's a number of drivers that are fueling this growth across the accommodation category. So it's supply growth. So there's been a robust pipeline of hotel construction prior to the pandemic, particularly in emerging travel markets, which is obviously being impacted now, but it'll be interesting to see how how that hotel construction starts back up potentially after the pandemic. Clearly, fragmentation, intermediaries are addressing this market chaos through aggregation and standardization of supply. And then there's margins. So relatively high commissions versus other travel segments. Almost $500 million has also gone into startups focused on airport, which is the next category. Though to be fair, this is almost all one company out of China called CloudWalk, an AI facial recognition company focused on security. So we'll start to see likely more of these companies emerge as we exit the pandemic and transition into recovery. Another $500 million has gone into car rental startups at just over 400 million to air startups. And then there's the tour category, packaging tour, which is multi-day, and tours and activities, which are single-day tours, where only 150 million has been raised each year. So that may be a little bit counterintuitive, as we've seen a lot of activity in tours and activities, which is also a fragmented marketplace. Most of the funding there has gone to the more mature startups before 2015. So that's Get Your Guide and Klook. So that skews that number a little bit if we're just looking at it through the lens of those companies founded since 2015. So as we transition here to look at companies that are founded, clearly following the money, lodging is the most popular category to start a company in, with around a quarter of all startups tracked in this study operating in that lodging category. As I alluded to on the previous slide, this is mainly because of the margins available there. And in the other category, there's a lot of corporate startups. And in addition to that, it's companies in finance, insurance, and data solutions that cut across multiple verticals. Another interesting piece of this slide is air, that has slightly more companies than short-term rental. And we've seen more companies focused on air over the last few years. So, for example, a company called Exosonic, who was the winner of our Battleground Americas event last year, focused on designing the next supersonic jet that can fly over land, to companies like TripStack, who are working on providing virtual interlining content to OTAs and other distributors, to companies like Duffel and Air Gateway, who are focused on enabling NDC content for travel agencies. We also see itinerary and inspiration ranked towards the bottom on this list, and both fall completely off the list of most funded verticals over the past decade. While travel planning startups have led the way in filling up the graveyard of failed travel startups, maybe now with the advancement of AI and personalization technologies, these verticals will start receiving more funding and realize more success as we move forward. Or if both of these categories are not truly addressing an industry problem, maybe these categories continue to flounder in the coming years. So it'll be interesting to kind of follow that trend as it relates to trip planning companies. So here's a look at those segments that we at Phocuswright and PhocusWire believe have a higher likelihood to survive and potentially flourish in the post-COVID industry recovery. So the first category is safety, and travel startups that are helping travelers stay safe while planning, booking, transiting, and experiencing, as well as those who help with logistics to keep workers safe, are already clearly seeing a rise in interest during this pandemic. Road trips is also another category that, until full confidence returns for flight safety and the visiting of long-haul destinations without risk of exposure to COVID-19, travelers are likely to opt for shorter haul local trips. And startups that are catering to this segment should see a recovery in their business sooner than most. As we shift to technology, virtual reality, so if there was ever a time for virtual reality to shine, it's when it's impossible to travel or let alone leave the house. Virtual reality is the best option to experience a destination for now, and the boost of attention could be a boon for VR startups in the long term. Optimization. So as we talked about those companies specifically that have raised money focused on optimization, in the short term, startups that can help suppliers and large brands optimize their business processes with, as far as cutting costs being paramount during this time. During these difficult times, these types of companies should see a surge in interest. Insurance companies, so confidence in travel booking, as we believe will likely be up in the air for quite some time, as fear of new COVID-19 breakouts create uncertainty for travelers. So startups who can offer relevant protection against COVID-19 related fears should have a meaningful opportunity before them. Robotics startups that can provide automated cleaning, for example, and safer conditions for industry workers, such as airline cabin cleaning. A company called Germ Falcon, for example, that brings their robot onto planes to help clean planes. Also, hotel room cleaning. They're already seeing clearly rising interest in their services. And lastly, private jets. So it goes without saying that more travelers, especially in the corporate and luxury segments, will choose to fly private as long as they perceive it as being safer from the perspective of not being exposed to COVID-19 compared with commercial flights. So as we analyze the data and put some thought into which companies will have the likelihood to succeed as we move through the crisis and into recovery, we start to see some interesting trends developing. Funding, is certainly going to dry up in the next year. We know that mid to late stage companies will have the best chance of raising. However, early stage companies, and that's 68% of the cohort that we analyzed in this report, still have a good shot at funding, given they can be nimbler in their ability to adapt to rapidly changing conditions and pivot to business model that works if necessary. So they're generally a little more nimble, and they can shift their business to seek an evolving opportunity. Funding is definitely going to shift to those recession resilient categories. So some of those categories that we discussed on the last slide. And lastly, regardless of time, and we've seen this over and over again in the last 15 to 20 years, as great startups will thrive, travel, we know, will come back eventually. And there are still some investment dollars out there. Investors know they can certainly get favorable terms during the downturn. So travel startups that are truly solving a real problem can still get funded. Those who have great business and can put money or have money in the bank to give them a runway to make it through the downturn will emerge to some pent-up demand from potential customers and will rebound strong. Entrepreneurs at their core are fighters, and they're at their best when reimagining what an industry should look like. When things are in disarray is when the ground is most fertile for change. The world will be different when we start traveling again. We know that. Startups and innovators of all stripes will have a significant role to play in what things will look like on the other side. So now that we have a good feel for funding and founding trends, we're going to transition this discussion to startups that we find the most interesting. So every year in November, the Phocuswire team comes together to develop a list of the hottest 25 startups to keep your eyes on. For this year, not surprising, we see quite a few companies focused on those same verticals that have been hot funding categories. So nearly 30% of this list are focused on the accommodation category. So that's, lodging and short-term rental. Another 30% fall into air and tours and activities segment. And lastly, we see some business travel innovation, which again we've seen more of in the last 5 years than we've probably seen in the previous 15. And it's not just verticals that travel startups are focused on. We're seeing innovation in travel payments. For example, a company, Connects Pay, that focused on virtual payments, in content, robotics, autonomous, data, insurance, and group travel. We see some companies here that we believe are likely to thrive during the next recovery as they fit into the horizontal and categories that we defined earlier as ones that are likely to have a decent chance to succeed as we move through the crisis and into the recovery. So what does Phocuswright do with all of this data and insight on travel startups? Well, we've created an ecosystem to provide ways for all different types of industry stakeholders to gain access to these startups. Our open access research platform provides an on-demand access to our startup database. Focusrite Connects is our proprietary mentorship and networking platform that connects all different types of companies in the ecosystem in the form of mentoring relationships. We have set up a number of partnerships with industry events and associations, which expose startups to specific audiences relevant to their businesses. And lastly, at our conferences, we have created programs and events to expose the best of the best travel startups to our audience of senior level executives. And we have the numbers to back it up. Over the past 12 years, we've screened thousands of companies. We have placed nearly 500 of them on our stages. They've collectively raised over $4 billion, and 81 of them have been acquired. So if you're interested in seeing some of the best early stage startups, our next event is Battleground, which focuses on, as I said, earlier stage startups from North, Central, and South America. And this will be a fully virtual event, which will significantly increase the size of the audience, as well as the exposure opportunity for these early stage startups. So if you are an early stage startup and you're interested in applying to pitch at the Battleground event, the deadline is May 22nd. And again, the event will be produced on June 25th virtually. And there you have it. The current state of travel startups, which startups may be well positioned once we move into recovery. Kevin, back over to you.
Okay, thanks, Pete. Thank you very much for that. As always, if anybody has any questions about the data and how it's collected and some of the details within that, you can get in touch with the gang at Focusrite by a number of ways. If you want to do it publicly, you can do it on Twitter, that's @Focusrights, or you can do it via email. That's customerconcierge@focusrite.com, and Pete or one of his team there will get back to you with an answer. Now, Pete, before we go, I wanted to ask you just a couple of questions based on the presentation. Now, you said the best chance of raising money, the startups that are already existing, are those in the mid to late stage. Just for fear of being a bit contrarian, I wonder if maybe some VCs would be quite keen to back lower stage ones because they've got less money to lose. There's a bright idea there. We don't need to back it to tens of millions of dollars. We can just give it some seed funding, and maybe that's an opportunity for younger startups not to give up hope just because of what's been going on, possibly.
It's a good point, Kevin. And I've posed the question before: is it better to be bloated and well-funded, or nimble and underfunded? And you know what VC investors often look for. Yes, good product ideas is important, but it's almost more important that they're investing in a founder that they have confidence in. And some of those founders find the opportunity, so they'll bang away at something for a while, pivot, and ultimately find the opportunity. So you definitely see some VC investors that are willing to fund earlier stage companies if they're really confident in the founding team.
Yeah. And what do you think VCs are doing right now? And I don't mean, well, hopefully they're listening to excellent excellent presentations like this and getting a sense of the market. But I mean, a more serious point, are they probably looking at their own funds, as in their own banking funds, and how they're going to make it through the next couple of years or so on their own? Or do you think they're giving a guidance to their own companies, or do you think they're just kind of lying low and seeing what happens, or probably a heady combination of all three?
Yeah, I think, I've spoken to many over the course of the last few weeks, and I know they're certainly still open and looking at opportunities. Although I think to some degree they're waiting to see some indicators of what is recovery potentially going to look like, when is it going to come, and what segments are going to recover quickest. So I think that's, as they're looking at new investment opportunities, that's where their focus is. I also know that they're spending lots of time with their existing portfolios, making sure that they have the liquidity to make it through. And also, it's a good time right now to develop product and innovate. And we've got some ideas what recovery might look like, and those companies that can be most nimble now and develop products up against what the recovery looks like, they're going to be the ones where cash will increase the soonest, and they'll have the likelihood to kind of create some market leadership. And I think that's where startups are really looking at opportunities to take leadership of different segments of the market.
Yeah, and interestingly, not a question, just I guess a comment really. You said there have been some funding rounds going through in the last 2 months or so. Maybe some of these had actually been closed a little while before and they got round to announcing. But Air Doctor, which is probably something that is going to be a lot more relevant to people. I mean, we wrote about a company called Properly, which is a hotel kind of platform cleaning business that has just struck a deal with Booking.com, and you probably sense that deal probably wouldn't have happened unless what's occurring now. So in the midst of crisis and some lots of unfortunate things for hundreds of thousands of people, there does sometimes become an opportunity for things to happen in a way that perhaps they weren't anticipated at the turn of the year.
Absolutely, and as one of our esteemed colleagues, Sue Hoon, often says, never let a good crisis go to waste. And I think those startups that are really focused on doing the right things now, obviously they need the cash flow to make it through. But if they're focused on the right things and spending time there, then they'll be the ones that will survive and thrive in the recovery.
Yeah. Last comment from me, really. I mean, it seems like almost 10 years ago that we pulled together that Hot 25 list.
Yeah.
that you shared. In fact, it's only 6 or 7 weeks ago that I saw a variation of this presentation at the Travel Technology Show in London, and that also feels like a couple of years ago already. It's been a very long couple of months. So thank you very much, Pete, for your excellent presentation there. Just a reminder to those watching or listening, any questions about the data, how the State of Startups report is pulled together, or any other questions regarding Focusrite research, you can get that from, like I said, publicly on Twitter, which is @Focuswright, or via email, which is customerconcierge@focuswright.com. Just a couple of bits of housekeeping. This is the second of what I said is a semi-regular series of Fast Facts. We'll have more of these presentations looking at other elements of Focusrite research in the coming months. We also have our regular podcast, which is In Focus. That's another Focusrite and FocusWire combined effort, getting the family together, doing lots of projects together, which is fantastic. We have a new project, a new product launching this week, which is called New Reality With, which is one-to-one virtual Zoom fireside chats, we're calling them, because we're not doing them in person. So a Zoom fireside chat with industry leaders. And obviously we have the one that's in episode 6 already, which is our hotel forecast reports. We've already covered Singapore, San Francisco, London, New York, and we have another one coming out this week. So look out for those. That's all from us. So thanks again, Pete, for your excellent presentation. Thanks, Pete.
Thanks, Kevin.
Okay, and thank you very much to everybody for tuning in. We'll see you next time. Thanks a lot.
Thanks.